Insimbi has reported a 54% increase in its four-year headline earnings per share to 6 cents. Here to talk us through those numbers is the company's Financial Director, is Fred Botha. Thank you so much for joining us, Fred, this morning. You have managed to report some rather positive results. HEPS up 54%. We also saw 15% growth in revenue. Could you kindly talk us through what drove those results?
Mashudu, it was a combination of a number of circumstances. The one was obviously markets have generally improved through the financial year under review. So we've come through a very tough couple of years, and I believe that we've come through admirably and obviously off a fairly low base. So the figures are impressive. We're very happy with them. There was growth in the construction sector. There was improvements generally in commodity prices, and certainly the weakening of the rand has assisted us.
Like you say, growth in the construction sector. In some ways, you are possibly a leading indicator of what's happening within the building industry as you supply to the steel and as well as cement manufacturers. Are you seeing a bit of a pickup in the demand for your products at this stage?
Definitely, pretty much across the board. And we are experiencing that going forward in this year as well. There's a nice, very sustainable and consistent performance throughout last year, which is very promising.
And looking at your other suppliers, you supply Mondi, you supply Sappi, and while construction is quite cyclical, most people are saying that the paper industry is in decline. Are you of that view, since you are a supplier there?
Sappi and Mondi, from a value or a volume perspective, are quite small to our business. We really only supply them with their refractory requirements. The refractory cycle is obviously a cycle that tends to lag the steel and the foundry cycle. So we do expect that in the current year to pick up, but they're not a huge part of our business in terms of our overall product offering.
Let's talk a bit on those operating costs. You have managed to draw them down by 9.2% to 64 million. Could we perhaps see further decline in your operating costs going forward?
I think what's very impressive about our operating cost decline is that our revenues went up by some 15 or 17%. We have a fairly fixed base of overheads. What we have been able to do is rejig our businesses slightly, reallocate certain expense pools within our operating costs. They will probably be more or less consistent going forward with what we've achieved in the current financial year.
We know that you moved from the Alt-X, now you're on the main board earlier this year. That was in January. Are there any opportunities for acquisitions going forward at this stage?
Absolutely, and one of the motivators behind the migration to the main board was to try and elevate our profile. Obviously, it's been a difficult market. It's been difficult for small caps, and it was certainly difficult in the Alt-X space. And time will tell, but we are confident that going forward it's the right move, and it will give us the opposition or the possibilities to raise capital to do acquisitions.
Let's chat on some of the markets that you are present in. You are in South Korea, you are in Japan, India and China. There's also talk of a bit of a slowdown coming through in China. Looking at those markets at this stage, are you pretty confident that you'll continue to post growth that you have been producing over the past year or so?
We're very confident given the context of the South African market, bearing in mind that 80% to 85% of our total business is done in sub-Saharan Africa. Obviously, China, we source more from China than supply to China. The emerging markets seem to have been slightly more resilient. Japan is recovering from their tsunami disaster last year. And certainly the government undertaking to spend on the infrastructure locally is a big plus for us, and hopefully we'll see fruit born from that undertaking. So offset against the European situation, we are not that dependent on the European situation, and most of our markets are emerging market targets. And we are confident that the emerging markets will be more resilient than the traditionally historic markets.
As always, shareholders would like to see a dividend. Your previous results, you issued a dividend, but this year nothing came through.
No, we did. We've declared a final dividend of 1 cent per share, which went out in cents this morning. It's the first time in 2 years that we have posted or declared a final dividend, and we put that out there as a very positive sign. So in terms of the full year for the year ended February 2012, we declared 3 cents dividend. There was an interim dividend of 2 cents in September or October last year. And that's in line with our 2 times dividend cover policy that we that we've put out there to the investing community.